we have to execute in a timely manner, and we have to, again, without a shadow of doubt, say, I have received Joe Smith's documents 100% and they are good to go, right? Because some of the strategies, let's talk about some of the strategies. So I've had to basically review all the documents 100% and say, we will remove the loan contingency when you accept the offer. So why would I do something like that from your perspective to get an offer accepted in this environment?
Yeah, so this is going to be a key point for the seller, knowing that your loan is fully approved and you're confident enough that you can even remove your loan contingency at the get-go.
Yep.
And that would bring your offer literally on the top, even if it's not in the highest and best for the seller. Because now they know that their goal, which is not getting a loan again, their goal is to buy their next property or investment, etc. They have to time that, and by having that in place, they know that they can rely on this transaction to move forward with their goals and plans.
Now we still have to submit the loan for final approval, which is a conditional approval. So that doesn't mean all the items are cleared, but we're still saying, hey, I know I've looked at 100% of the documents and this loan will go through. And I'm so confident in saying that yes, I'm going to say that you can remove your loan contingencies with your offer. So then what about the appraisal? What do we do in that situation? Because you can remove your loan contingencies, doesn't mean you're removing your appraisal contingencies. So that's another layer of fun,
and
right?
That also depends on the type of the loan and price point that you're purchasing at. That how much flexibility we can have on the appraisal, because the whole industry is busy.
Yeah.
If we do need appraisal, then we might have a turn time with the appraisers that now it's getting harder and harder to schedule with them.
I think we're still getting it done for
yeah, we are, but I'm hearing that the other states are even getting to like 2 to 3 weeks.
Sorry, other states. We're in California, so we're getting them done quick.
And you know what? Even other counties in California. And I mean, we are lucky yet in Orange County that we can get these done because we might have more appraisers
so we're
than
even
others.
Luckier to be in Orange County in Southern California because we're still getting that done fast.
Yeah, but it needs to come in. Now, the good news is that they are, with very, very limited exception, they're coming in at value.
Yep.
And properties are in a good shapes. Nobody is selling like a tear-up property anymore, or flip properties are not as common anymore. So properties are in a good shape. Values are coming in pretty good. Appraisal process can be, but it's important to expedite that process. And we can expedite it if we have a full if we have a full application and we have documents that we are ready to get the information that we need from escrow to order it.
So from an appraisal perspective, so if you are shopping for a home and you're pre-approved in Orange County market and you're looking for a home that's somewhat turnkey and it's $750 and you're approved for $750, you better be ready to go higher than $750. So if you're, I mean, I hate saying that, but I've had clients shopping at like $800,000. Or they're approved up to $800,000 and they keep shopping at $800,000. And we're like, it's going to be very hard to compete against somebody that's approved for $900,000 and you're going in right at your limit, right? So give yourself some room there, because then you can work other strategies to help get your offer accepted. So let me give one strategy with the appraisal thing. So I have 20% down and I'm buying at $750. The home ends up going for $765 and it will most likely appraise at $750, right? Which means there's a $15,000 gap from purchase price to what we're going to do the loan from, which is the lower of the two, right? $750. So if you have your limit of 20% down and now you have $15,000 to make up for, one of the strategies we're talking to clients about is, hey, can you afford an extra maybe $100 to $115 on your payment? And what we have to do is we have to then go under 20% down, use the $15,000 of your down payment to bridge the gap of purchase price to appraised value, right? And then you're gonna pay a small percentage of PMI but you're going to get the house.
But the good news is that you will come out of that PMI pretty fast because you're just slightly above that 80%. And as soon as you pass your 2-year first mandatory part of the PMI, you're off the hook, and that would give you your $100, $150 delta back.
Yep, and again, it's a strategy, right? And what would make me go with that strategy? Well, if I really like the house, I can still comfortably afford the payment, and I know it's a house that I want to live in long term, right? If you're doing something like that to live in a year or two, I will tell you no, because we don't know what's happening with the market. We have an understanding that the market's, because of lack of inventory, and there are more people than there is supply of homes, which is scary at the same time because, of demand, but it's just the reality of what we're dealing with here in Orange County and Southern California and a lot of California. I have a client that's moving up north. He's dealing with the same thing, right? He has to go above listing price. So I think it's important to make sure that who you work with matters from a real estate standpoint, from a lender standpoint, because we just can't send your letter to your real estate agent without a conversation about how to strategize to help you get the home that you really like.
And another thing that comes in play with the markets that are experiencing appreciation in a rate that we are is that now agencies, Fannie Mae, Freddie Mac, are more willing to allow us to waive the appraisal, meaning that as long as we have a solid backup as far as the comparable properties and they have enough data about the property that you're putting an offer in, there's a chance that we can get the appraisal waiver and not even need the appraisal to be worried about this. So that's another thing that it can be checked on the different addresses, not 100%, but it can, if we get the documents, if we have the contract, in the first few days, we can make sure that if we can waive the appraisal altogether, and that would be helpful in that price range. That's not available for $2 million properties or...
Not for jumbo. It's under 765, 600 in Orange County. So let's talk about process, right? So we put an offer on a home and we talk about strategy. So one, I think making sure that your agent has a strategy to make your offer stand out. And that could be sending in a video of you and your family, writing a customized letter of like why you want that property and, kind of the touchy-feely things to appeal to the seller, because not every seller is just looking for dollar amount, believe it or not. They if somebody's lived in their property for a long time, they want to make sure their neighbors, when the new owner comes in, is taken care of and everybody's still getting along. That is considered. Also,
what's the seller's motivation?
Yeah,
what if they're buying something, what's their time frame? Because if we can conform with their time frame, there's a better chance for them to like our offer.
Yeah. So make your offer stand out. Agent, have the conversations with the listing agent upon submission of the offer. We're trying to set the tone for how this process is going to go. And then I know something that we do, and is a best practice for our office, is we call the listing agent once your offer is submitted, because again, we've heard that a pre-approval letter is just worth the paper that it's written on, right? So we have done this for years, not only in this market, but to say, hey, listing agent, let's talk about why this is truly a pre-approved loan, and talk about what questions you and your seller may have that's important to them about accepting the offer, right? So that's something you do.
Yeah, and that's a way for us to communicate with the listing agent what our time frames look like, what we can offer, and how confident we are on the finances of our buyer. And not that verbally has anything different than the pre-approval letter, but it brings that personal communication and be able to answer those questions that they might have. Because again, they are sensitive to the time frame. They want to make sure that it's going to be delivered for the amount that they want.
Yeah, we care about the buyer, but we also care about the seller, right? We know that they have their situation too, and both have to be teamed up to actually get the offer accepted and to go smoothly through the process and execute. So also, all banks aren't created equal. I know Guaranteed Rate has a plan, and we we put purchases first. I know we have 2 different underwriting chains. So we have our refinances go through one set of underwriters, and we have our purchases go through another set. And that is to make sure that all of our purchases close on time and in less than 30 days when necessary, right? So, and we have a local team here in Orange County that is our processing staff that makes sure that real-time things get done correctly and efficiently the first time.
Remotely, locally.
Locally, yeah. I didn't say in the office because we're not in the office right now, so obviously.